Let's talk about Blue Apron Holdings. There's interesting things going on with both the income statement and the balance sheet, and in the end, I will take a look at the company website to preface how some of these financials translate into the real world. Now, this company was trading at about $140 in the past, and today it's only trading at about $1. So there's a multiple of reasons for this. Taking a look at the financials, we can see that revenue itself has decreased. However, a very interesting part is how cost of revenue is such a big part of total revenue. So the revenue here is very costly. And as you can see, operating expenses here, we have a loss in terms of operating income. So the business is not very profitable. In terms of basic per share here and diluted per share, we can see that per share they have been losing money for years now. And taking a look at the balance sheet, ordinary shares numbers, you can see here the amount of shares outstanding has been increasing year over year. And if you were quick in the beginning of the video, you saw an article about how the stock price is plummeting on plans to sell new shares, and this was a recent article, so we can assume that the ordinary shares numbers will increase even more going forward. And remember the earnings per share loss. Well, the loss is just growing since the amount of shares is increasing and the earnings per share loss was about the same. So this is a very bad sign. Just looking at cash flow as well, you can see free cash flow indeed negative. Not a very good sign. And translating these insights from the data into real world business discussions, we can see that they have a lot of different meal kits. The chef's favorite, wellness, just so many different choices. And one of the things that really strike me is, are all of these choices really that profitable? Why is there so many different choices? Can they focus down maybe and try to only do the really profitable ones, and by doing so reducing the cost of revenue? Maybe it's way easier to produce the meals here, the food kits. Maybe so indeed, because I believe that there's no way that all of these selections are profitable, and they could indeed trim down a lot here and only focus on where they get the most bang for their buck, turn the company around, make it profitable, divest, sell off assets, and just focus on the core business that they see work really well. So instead of having hundreds of different solutions and spreading their energy on trying to make them all good, they focus on just a few and really drill down. And instead of going very vertically, they go horizontally and focus their efforts on making an offering that really, really works, and then growing from there. So we can see some troubles in the business in terms of the website here. I don't really find it super appealing. For example, here under continue button, you can update your preferences and skip, pause or cancel at any time, and a little asterisk. It's like they're assuming that I will want to pause, cancel or change my preferences. And looking at this as a consumer, it makes me a bit doubtful. So those are my thoughts, taking a look at the decreasing revenue and the cost of revenue, showing you guys how shares outstanding has increased, and then taking a look at this wide variety of different meal plans and selections. And use your own mind on this. You really believe that all of this is profitable, or is the high cost of revenue a direct result of all these different offerings trying to cast this super wide net instead of niching in and finding something that really works? Well, that's been it for this video covering the Blue Apron stock, and as always, I hope you make a ton of money, whatever investments you decide to make. Take care now. Bye bye.